Hello everyone, this is Atlas Capital and this is my performance review for the year ended 31st December 2022. So I would like to start from introducing myself, since this is my very first presentation. My name is Vlad, I come from Ukraine. In 2016 I relocated to Malta when I got an offer from one of Big Four firms. And 2 years later I registered my account with eToro. So since then I'm trading on eToro. It's been almost 5 years, and I use value investing approach as my strategy when selecting stocks. But the distinction between value and growth stocks is basically not that huge as someone might think, because the only difference is because value companies, they are usually in a more mature stage, and so they basically return most of profits to shareholders usually, and not reinvest in company itself. And that's the analysis I prefer to make, because for me it's easier to make an analysis for a mature company. So when I started with eToro back in 2018, I had very ambitious goal to outperform index by at least 5% on average annually, but not necessarily every year. And for the 10 years, its cumulative outperformance should be at around 65%. Later we will speak about current figures. And let me remind you that it's very hard to outperform market over long term. In particular, I have a 10-year period when I will make a final evaluation of this project, and 95% of investors, they cannot really do that. So at the moment I have 237 copiers, which trust I really appreciate. It means a lot for me. I also have around 6,000 followers on eToro. Before we start on discussing my performance, I would like to present a reproduction of the analysis made by Warren Buffett many years ago. I think it's useful for anyone who is interested in stocks and thinking or already doing some investments. That's this slide is showing us correlation between interest rates, GDP growth, and stock market return. I use S&P 500 as a, as a yardstick. So when we see what we see here is the outcome. The purpose of this chart is to show you that it's not that the stock market is not really correlated with GDP as we used to think. For example, here you can see during these 17 years there's fast growth, very huge growth rates, growing very fast, right? So what happened during interest rates during this period? They actually grew. They grew a lot. In 1981, the interest rate was 12%. So what happened after this quick growth in interest rates to stock market? What we can see is the growth was very the growth in stock market was very subdued. Actually, only 36%, right? Despite this huge growth in GDP. And the reason for such a low growth level is increase in interest rates. Okay. So now what happened later is we can see there was a slowdown in interest rates, and GDP growth was somewhere on in average range, I would say. But S&P delivered very promising return, very good return, 965% during these 17 years. And that's because we can see, as we can see, interest rates decreased a lot. So the Fed was doing a lot of stimulation during this period, and the real correlation is actually between direction of interest rates and not necessarily GDP direction. Later, so what happened later until recently, interest rate kept going down, lower and lower, and actually we can see that returns since 1998 until 2019 was okay comparing to first period discussed. Even though when looking at GDP, we can see that this was the lowest growth during these three periods discussed. So watch out for direction of interest rates, and that's what I usually do. I follow in my strategy. I adjust my portfolio on a dynamic basis by looking into stock market levels and by looking into direction of future interest rates. Okay, for example, if I see that the interest rates have been at a very low level recently, 2020, 2021, I would limit my exposure to high volatility stocks and stocks overall. So I will go more defensive in this situation. And then looking at a present situation, excuse me, we can see that interest rates have grown substantially during last year, and so probably now it's a good time to increase exposure in stocks. Okay, so that's a small analysis on correlation between interest rates and stock market. Now let's start and let me discuss and let me introduce my portfolio. So here we have a 5 years period of outperformance of S&P. The only year when I didn't outperform was this year, 2021, and but again, it's not my goal to outperform every year, but what is important to outperform on average. So at the moment I'm already 95% ahead of S&P 500, and my goal for 10 years was 65%. So I can actually go and buy S&P index and will outperform after 10 years as well, but that's not my idea, obviously, because my idea is to outperform on a regular basis, and I am planning not only to outperform for the 10 years in total, but within next 5 years in particular, I want to achieve some decent results. You remember, or maybe you heard about that most hedge funds, they cannot beat index, they perform worse. So it's very difficult task to outperform. But if you have a small capital base, then it is possible. Then it is quite possible, in my opinion. Okay. So this chart is showing growth of 10,000 invested in my portfolio in 2018. Now if you had invested at that point of time, you will have 25,000 versus S&P 500, you will have 15,000. This is an overview of my current portfolio. These are top 10 stocks, and I I'm when I research stocks, I use fundamental analysis most of the time, and I adjust on a dynamic. I use dynamic asset allocation, so I use some bonds as well in my portfolio, some hedge sometimes if I see necessary. Uh, so these are 10 stocks which I have currently, and uh, you can also see here that I have some spare cash. So I usually prefer to have some spare cash to invest when a good opportunity will arise. And yeah, the largest position is with Herbalife Nutrition. Second is Sally Beauty, then Imperial Brands, Big Lots. Uh, so that's top 10 positions, and we will speak now a little bit more about portfolio constitution. So basically I have exposure to North America and the United Kingdom, that's Imperial Brands stock, but the distinguish about geography currently, I think, is very notional, because the companies will usually have revenues from all over the world. So, but because they are listed in North America and United Kingdom, and those are developed countries, I usually try not to look for listings in some parts of the world, Asia in particular. Uh, I would say I'm very cautious about those countries. So luckily I didn't have any exposure to Russian stocks recently, and that was on purpose, obviously, not only because of luck. Uh, because I felt like the country is actually not going in the right direction, so I haven't bought any stocks in Russian companies. This is actually, you can see here a constitution of my portfolio based on beta. So at the moment it's split equally between high beta and low beta. I have some spare cash at 12%, and then I have some hedge. So I decreased the hedge element recently, and I increased my exposure to stocks, in particular high beta stocks. That's because, as we have seen recently, a slowdown in market. It was actually almost a bear market recently. So at that point of time, that's the point of time when I usually will go for purchasing some more stocks and increase my exposure. I also try to diversify by sector. Well, I'm not actually I don't like the idea of very wide diversification, so I prefer to diversify and maybe have 10 or 15 stocks in my portfolio, because I believe that if you have very wide diversification, it's very hard to outperform S&P index. So I keep my stocks number of stocks at 10 or maybe 15 different companies, but I also try to diversify by sector. At the moment, largest share is with consumer defensive, and maybe I will think about decreasing this exposure going forward. But that's at the moment I have second largest consumer cyclical stocks and also healthcare, that's more defensive, bonds as well. So that's a quick overview of my portfolio. Now, thank you for watching. As you can see that um, I have achieved decent result during this 5 years period, and last year I outperformed by 19% almost, which I consider this as a very good result, and 95%, so that's on average it's around 15% per year. So that's quite a good result. Obviously, I'm not a financial advisor, and I cannot guarantee that I can achieve this result going forward. But I usually guarantee to my co-peers, to my investors, that I will do my best and I will apply my knowledge to achieve this goal. So thank you for watching. I invite you to check links below. And if you have any questions, feel free to leave in comments section below as well. You can also use form on atlascapitalinvesting.com to send me any questions you have.